today. It's time for a little Universal Studios. That looks fun. All right, so biotechnology stocks, of course, are not no strangers to being real roller coasters, and it's certainly something I was reminded of going on some of those roller coasters at Universal Studios. And so, what I wanted to go through just real quick today is touch on the basics of this. Essentially, we've had biotechnology stocks be massive outperformers for something like the past 5 or 6 years. Looking back, starting at 2015 and looking back. So they've been massive outperformance, and now this year, 2016, at least so far, with about 3 weeks left to go in the year, they are a big underperformer. So biotech is down about 20% year to date. This is now December the 12th today. And so the question really becomes, are they going to be chased higher into year end or not? So there's two lines of thought or that I kind of want to touch base on, and so you guys can kind of get your head around it. One, the bulls would argue that biotechnology stocks here are going to be chased higher into year-end because of the very fact that they have been underperforming. So if you look at the IBB ETF here, they are making the argument that because they're the laggards, that the sector rotation will ultimately get these stocks moving higher into year-end. Now, that's entirely possible, but let me quickly also tell you the bear side before giving you my take. The bears would look at this and say, listen, the biotechnology stocks are probably not going to get a bid into year end because they have been the underperformance. So if you look at mutual funds and just in general funds that have to chase performance higher into year end, which a lot of them do because they've been caught on the wrong side of the market. Once again, like they do most years, it's a normal thing to do at the end of the year. They have to chase or whatever to kind of keep up with the markets. And the argument would be that they wouldn't want to buy biotechnology stocks because they've been underperformers. In other words, they wouldn't want to window dress their portfolios, like put those stocks in their portfolios so as to make it look like they held those losing stocks in that last quarter. So there's really two lines of thought here that, in my opinion, really both of them are fair game until we see some sort of a breakout. So what I'm looking for in the IBB ETF, and again, keep in mind it's been stuck in a range ever since breaking down in January. So the biotechnology stocks, largely speaking, have been stuck in a range. So the IBB, for example, in my opinion, needs to probably get above 286 or so on a daily closing basis in order to start giving us more hopes of a potential rally. From right here right now, that's about a 6 or 7% move. That's not little for biotech to overcome. So I don't think the biotechs are a touch here right now on the long side until they see some sort of a strong bullish reversal. We're seeing initial potential bullish reversal take place in stocks like Amgen, which last week had some sort of seller exhaustion, but again, not enough follow through buying it. So biotech stocks can be a real roller coaster, guys, so you got to hold on tight. Make sure you let the prices come to you. In other words, in IBB right now, if you want to play on the long side, personal opinion, I think we need to see a move above 286 or so, or even more, in order to see a better upside momentum.